Namaste, good morning. The session where we complete assessment of firm and also AOP BOI. We are progressing to the next question, a slight advancement from the previous question which we did yesterday. X, Y, and the HUF, which is represented by the Karta or Z, are partners with equal shares in Talaver's Cinevision, which is engaged in the production of TV serials and telefilms. In the financial year 2021, one partner A retired, but his dues are settled only in 21-22. The earlier partnership deed did not authorize payment of remuneration or interest to partners. The partnership deed was revised from 1st June 2021 to authorize remuneration of 1 lakh to each working partner and simple interest of 15,000 to X and Y on their capital. X, Y, Z are partners who are working partners. The profit and loss account for the year ended shows a net profit of 10 lakhs after debiting or crediting the following. Interest amounting to 7.5 lakhs each was paid to the partner on the balance in their capital account for the whole of the year. Interest is paid for whole of the year. Two things to remember. They would have paid interest at 15% because the deed said 15% per annum. The deed said 15% per annum. But we can only allow 12% for 10 months. They have paid, this is what I think Ananya was asking yesterday. They have paid 15% for whole year. We have to allow 12% for 10 months. The balance should be disallowed. Remuneration to the partner, 30 lakhs. Interest amounting to 2 lakhs paid to Z on loan provided by him in his individual capacity at 16%. Royalty to 5 lakhs paid to partner X, who is a literature and a professional script writer, for use of his script as per an agreement between the firm and X. Huh? 48.2. That is, they say that it is coming under 48.2 provision. Any other answer? It is allowed as a business expenditure because it is for an agreement between the partners, skill set, and the firm. That's what one of the answers. Any other answers? It is assuming that it is as per fair market value. We should allow under 48.2. Okay, right. This is where I think I asked you to remember, but good time to recollect something. Okay. when we said about remuneration, we used the terminology salary, bonus, commission, or any other sum. Remember, if you allow such things, this every partner will have a skill set. Every partner will have a skill set. So, the purpose of 40B will be defeated. Instead of taking it as remuneration, they'll say this partner has an administrative ability. This partner is marketing a professional. This particular partner is able to sustain clients. So, the law has said salary remuneration means any bonus, commission, salary, or any other sum, which means all other than interest on capital, everything that is paid to a partner in the name of remuneration will fall under this. So, this, though they call it as a royalty of 5 lakhs paid to a partner, it will come under the provisions of 40B. Because the term used is any other sum, it will come under the provisions of 40B. Two separate payments, 18,000 and 9,000 made in cash on 1st Feb 2022 to a hairdresser against a bill in January 22. Is it 18,000 disallowed, 27,000 or both? On a single day to a particular person. It might be for 3 invoices, 4 invoices, 10 invoices, disallowed. And 2 payments of 9,000 and 10,000 were made on 1st and 2nd Feb to an assistant cameraman, allowed. Because it is not on a single day, the amount has exceeded 10,000. So the difference between the 2 payments are, the first payment is for 2 invoices, but on the same day it exceeds 10,000. The second payment is for 1 invoice only, but it is paid on 2 different dates so that it does not exceed 10,000. Amount of 5 lakhs provided in the books on 31st March as liability for remuneration to a film artist and a non-resident. Tax was deducted at source under 195 only at the time of payment. So this year you will disallow and allow it only in 22-23. Tax has to be deducted in the same year in which expenses are incurred. Remittance can't time till due date of filing. So before 31st March, tax has to be deducted. If not, since it's non-resident, 100% disallowance. Amount of 6 lakhs provided as gratuity, add back gratuity provided, reduce gratuity paid. Always add back gratuity provided and reduce gratuity paid. Interest on income tax refund is not a business income. Other sources. The firm's other informations are the amount due to a partner, the former partner, was 15 lakhs. This was settled by the current year by transferring a plot of land purchased a year back having a book value of 10 lakhs. The difference 5 lakhs were credited to partner's capital account in their profit sharing ratio. Fair market value is 16 lakhs. Compute the total income of the firm, stating the reason for treatment of each item. Net profit as per profit and loss account, 10 lakhs. My dear friends, two partners are eligible for interest. Two partners, each partner 7,50,000. So totally 15 lakhs is the interest paid at 15% for whole of the year. Okay. Actual interest paid 7,50,000 into 2. Okay. Two partners. Okay. Interest is paid at the rate of 15% for whole year. Therefore, capital will be, okay, this divided by 15%. The capital will be 1 crore. Capital will be 1 crore because they have paid 15% for full year. Okay. Allowable interest at the rate of 12% for 10 months as the deed is amended only from 1st June. Okay. So what do we do? It will be 1 crore into 12% into 10 by 12. 1 crore into 12% into 10 by 12. Okay. Therefore, excess interest disallowed will be 5 lakhs. Excess interest disallowed will be 5 lakhs. Always in exam state the obvious. I accept that there is an easy way to just do, or in calculator you can easily do. அது இன்ஃபேக்ட் நீ இது எடுத்து பார்த்தேன்னா as per 40B only from the date of amendment. Am I clear? Okay, right. Remuneration, remuneration to partner. First we disallow, then we will allow. Interest to partner in a representative capacity is covered under 40A subsection 2, assuming that it is as per fair market value.
So this is in a individual capacity.
Yes, and HUF is only the partner. Royalty paid to the partner also be treated so this payment to non-resident, you should have deducted tax before 31st March. We should have deducted tax before 31st March. Where it is not deducted, it is fully disallowed. However, it is allowed in the year in which the default is rectified. It is allowed in the year in which default is rectified. Can you kindly check?
Sir, I have a doubt, sir.
Go ahead.
Sir, why are we reducing actual gratuity paid, sir?
Because the actual gratuity paid would have been adjusted against the provision. Whenever I create a provision, at the time of creating the provision, the entry will be provision for gratuity, profit and loss account debit to provision for gratuity. So, when gratuity is paid, provision for gratuity account debit to bank, they would not have taken it separately to P&L account. We are disallowing the provision and allowing the actual payment.
Got it, sir.
Maximum permissible remuneration as per deed. As per deed. Please understand, 1 lakh per partner into 3 partners into 10 months. That's why they have debited 30 lakhs. Okay. And please understand, plus 5 lakhs, that royalty, that is also agreed. So as per deed, repeating, it is 1 lakh per partner. All the 3 partners are working partners. Okay. Plus 5 lakhs. As per act, we all know 3 lakh into 90% plus 55 lakh 57,000 into 60%. Whichever is less is allowed. Any doubts? 23 lakh 57,000. Major part of the question is still PGBP. Every question has a 40A2, 40A3 TDS, because areas of questioning is very less. Apart from this depreciation, like that only they can. Okay. This is something which is still pending in our discussion, but on a overall basis you can start understanding, but the distribution, this 9b with 45.4, but in this case it becomes simple. Okay, computation of capital gains, firm distributing asset to partner. We all know this is transfer, because liquidation of a company and distribution of asset to members is not taxable in the hands of the company. It is taxable in the hands of shareholders. Dissolution or partition of a HUF is not taxable, whereas dissolution of a firm is taxable. FMV of asset distributed, they have provided in the question itself that the fair market value on the date is 16 lakhs. Somebody's mic is open. Can you please mute it? Less transferred land was purchased a year back. So it is a short-term capital asset. Purchased a year back. Okay. It is a short-term capital asset. That's why that information is given. Okay. Purchased a year back. Okay. Not years. It's a year back. Land purchased a year back having a book value of 10 lakhs. Having a book value of 10 lakhs, cost of acquisition, purchased a year back, hence it is a short-term capital asset, hence it is a short-term capital asset, 10 lakhs. Computation of total income. There are no deductions. compute the total income only. If at all they ask for the tax also, direct 30%. STCG is taxable at normal rates, but the question is compute total income. Profit of the firm கிடையாது, capital gains. It's a transfer of capital asset. Land has been transferred. Friends, okay, I again assure and I want to tell you to just ensure that you are feeling confident. All these are various examination questions. Whatever is that questions we have worked out, and in all these things, 2 adjustments, maximum 3 is firm. Otherwise, it's a PGBP question. Let's look at the firm from the other perspective of it. Okay. A partnership firm consisting of 3 partners is engaged in the business of manufacturing and selling toys. Turnover of the business amounted to 1 crore 95 lakhs, bad debts return of 75,000, cash payment made 62,000, firm did not pay deduct tax 1 lakh, interest as 12% to partner Z on his capital of 6 lakhs as authorized by the day. Partners are also eligible for remuneration. The firm had a brought forward business loss of 5 lakhs, unabsorbed depreciation 450. The firm did not pay tax under presumptive system till last year. The firm opts for presumptive system under the current year. Compute the income of the firm chargeable to PGBP. What would be the liability for interest under 234B and C if the firm has not paid any advance tax? Read. Okay. Okay. So a good time to recollect the provisions of 44 AD. More of 44 AD, actually the question. More of 44 AD. Okay. The question is more to do with 44 AD than to do with anything with the firm. Now, always since they have not given what is the distinction of turnover between electronic and non-electronic, please let us take 8%. Don't take 6%, 8%. This is one thing which I want to say. Will disallowances provision of 40A3, 40I, the 41, that is TDS disallowance, will these things apply? It will not apply. When we go for a presumptive computation, disallowances provisions will not apply. Like how we study in Sunil Vishwanathan case, disallowances here are tax neutral. So you cannot disallow because income is computed not by maintaining books of accounts. Income is computed on a presumptive assumption. So this cash payment of 62,000, this 1 lakh, these things will not apply. all expenses are deemed to have been claimed. So by interpretation, even interest on capital and remuneration are deemed to have been claimed. You cannot claim it separately. Even interest on capital and remuneration are deemed to have been claimed. Second, whatever may be the percentage, it is deemed to have been claimed. Third, the firm has a business loss of 5 lakhs brought forward and unabsorbed depreciation of 450. Can I claim this? The unfortunate fact is unabsorbed depreciation you cannot claim. Why? Because all expenses under 30 to 37 are deemed to have been claimed. Unabsorbed depreciation is in 32. We have all along thought that unabsorbed depreciation is only an advantage because it is in 32. Why? We said the return need not be filed within due date for unabsorbed depreciation because unabsorbed depreciation is not in 70 to 79. Section 80, which deals with set off chapter, says all losses covered under this provision, read along with 139 subsection 3, says it has to be filed within the due date of filing return to enjoy the carry forward benefit except house property loss. But we said unabsorbed depreciation is in section 32. By interpretation of law, that is not covered and we accepted. In various places of law, for example, in our partnership firm, we saw laws pertaining to the retiring or deceased partner carry forward by the firm, whereas it is not applicable for unabsorbed depreciation. That can be carried forward in full because it is said in section 32, this is in 72. So all along we have been thinking unabsorbed depreciation is only an advantage. Here is your first disadvantage. It says all expenses under 30 to 37 are deemed to have been claimed. So unabsorbed depreciation is supposed to have been claim பண்ற அந்த 92% of expenditure unabsorbed depreciation is also there. Only business loss can be claimed. Let's go slow. We should write all these points. Again, I tell you, it's an examination question. Antonio, நீ வந்து சரண்யா மேம் ஸ்டூடெண்டா? So in Charnya ma'am language, I tell you, go wash your face. If you want, you can switch off the AC. This AC is not working. The AC, if you want, you can switch off. Yeah, take the remote now. Okay. Turnover 195 lakhs. 1 crore 95 lakhs. Please let us, when we recollect 44 AD, let us recollect it as a whole. Okay. Assessee can opt for 44 AD as the turnover has not exceeded 2 crores. Up to 2 crores you can opt for. You can opt for income at the rate of 8% of turnover. Income at the rate of 8% of turnover. Since it's presumptive computation, disallowance provisions are not applicable. Since it is presumptive computation, none of the disallowance provisions are applicable. Hence, cash payment or non-deduction of tax are revenue neutral. All expenses are deemed to have been claimed. Hence, interest on capital or remuneration are also deemed to have been claimed. Okay, all expenses are allowed. All expenses under section 30 to 37 are deemed to have been claimed. Unabsorbed depreciation is specified in section 32 and the same is also deemed to have been claimed. Unabsorbed depreciation is said in section 32 and the same is also deemed to have been claimed. Am I clear to you? Okay. So, business income slash total income business income, less brought forward business loss. Less brought forward business loss 5 lakhs. Brought forward business loss which is there in section 72. Only unabsorbed depreciation is deemed to have been claimed. Chapter 6, set off of losses. So points to remember, we cannot claim remuneration and interest separately. It is part of that 92%. 8% is directly income. unabsorbed depreciation brought forward is deemed to have been claimed. Okay, so 10,60,000. Now, note 1, 234B is applicable even if income is computed on presumptive basis. 234B is applicable. You should have paid it, otherwise from April 1st you will be computing. Second, and the important point here is, okay, where assessee opts for presumptive computation, okay, only the last installment of advance tax, that is March 15, is applicable. Okay, only the last installment. June, September, December installments are not applicable. Only the last installment of advance tax is applicable. If that is not paid, only for the month of March 234C interest will come. When we do advance tax, we will do questions on this. Question number 14. A private limited company is converted into a LLP on 1st April 2021. The following are the particulars of private limited company. Before progressing with this, a quick look at two provisions. Okay, a quick look at two provisions. Okay, yeah, perfect. Okay, my dear friends, conversion of company into LLP. Okay, company. Okay, all assets and liabilities should be taken over. All the shareholders of the company immediately before conversion should become the partners, and no other consideration. 60 lakhs turnover should not have increased. Okay, and 5 crores net worth should not have increased. Okay, in the last 3 years. This is the theoretical. But I want you to understand something else also, which is very important. Okay, set off. Okay, conversion of a company into LLP. Losses and unabsorbed depreciation can be carried forward by the LLP and set off over the remaining period. This is mainly for losses. So 5 years the company is over, remaining 3 years. All conditions which we read should have been fulfilled. However, MAT credit cannot be, because the computation itself is different. AMT computation, MAT computation are different. So MAT credit cannot be carried forward. Remembering this, I am coming to this particular question. Unabsorbed depreciation, business loss, unadjusted MAT credit, WDV of asset, cost of land, VRS expenditure incurred in the financial year 1819. Assuming all conditions relevant to conversions are fulfilled, explain the tax treatment in the hands of LLP. A theoretical question. Read through. First, we will do it. Let's talk about it. Treatment of various items in the hands of LLP on conversion. Unabsorbed depreciation. Can the LLP carry forward it and set off? Yes. This can be carried forward by the LLP and set off against any income. There is no restriction on the period of carry forward. Business loss. Can this be carried forward by the LLP? This can be carried forward and set off over the balance period. So if already 4 years have lapsed, it can be set off for the remaining 4 years, maximum 8 years. This cannot be carried forward by LLP. In other words, this is lost when the conversion what happens? Okay, we have studied this in section 43 while doing depreciation. At what value this can be recorded? value prevailing in the books of transfer or entity. When I say books, I mean income tax law books, adjustment statement, where we present the value. Okay, this can be recorded only at values prevailing in the books of the company. Non-depreciable asset, same provision. Okay, assets and liabilities can be taken over only at book values. The original cost of acquisition of non-depreciable, mainly land asset, can only be recorded as addition. If at all any revaluation has taken place, the same needs to be ignored. If at all there is any revaluation at the time of conversion, probably it is for books of accounts and not for books of income tax law. So the same needs to be ignored. VRS expenditure incurred in 1819. VRS expenditure incurred in 1819. Any answers? It can be claimed in 5 equal installments. It's an amortization. So 50 lakhs is incurred 1819, 1920, 2021. Company would have claimed 10 lakhs each year. Now can it be carried forward and claimed by LLP for the remaining 2 years? Can it be carried forward by the LLP and claimed in the balance 2 years? It can be. Any other answer? It can be. Enna Ananya? Okay, yeah. I mean, yeah, you're all right. It can be. Unabsorbed depreciation can also be. Okay, just that I was waiting for something. Okay, but time to recollect and put it into our mind like a nail. Provisions will apply to the transferee entity as much as it would have applied to the transferor entity had the event not taken place. So, yes, the answer is right. ஆனா எழுத வேண்டிய the line that will hit the examiner is yes, you can claim it. The balance to install 2 years, okay, the assessee, the other assessee can claim because the law has one parent line which says provisions will apply, okay, right? The company would have claimed the VRS expenditure as an amortization for the financial year 1819, 1920 and 2021. LLP shall carry forward the unamortized amount and claim it over the balance period of 21-22 and 22-23. Provisions will apply to the transferee entity as it would have applied to transferor. This line is not just capital gain. Starting from residential status, I will go up to assessment for this line. Everywhere. We use this line in PGBP everywhere. Scientific research asset, 41 deemed income. Successor has claimed the bad debt. Predecessor has claimed the bad debt. Successor is now recovering it. Is it taxable in the hands of successor? Yes. Provisions will apply to the successor as much as it would have applied to the predecessor. Okay, so it's the same. Question number 15. Vijay Agencies, a partnership firm constituted by 3 partners with equal share, was dissolved after a search was initiated. The tax liability of the firm outstanding to be paid was determined at 15 lakhs. Out of the 3 partners, 1 partner became insolvent. The AO, for recovering the demand, attached the bank account of the other 2 partners and recover an amount of 6 lakhs from the account of one such partner. You are asked by the partner of the dissolved firm the following question about the liability of each one of them to pay outstanding demand, whether the assessing officer is right in attaching the bank account to recover the tax demanded. Joint and several, and yes, the assessing officer is correct. Okay, the question asked to you is about the liability of each of them to pay the outstanding demand. In the case of a firm, partners are jointly and severally liable. Jointly or severally liable. Where there is any tax due, then the same can be recovered even from one partner as he is severally liable. Hence, the two solvent partners are liable to pay the whole of the outstanding tax due. Assessing officer is correct in attaching. You want the theory? ST and Co., a partnership firm, was dissolved, and as per the dissolution deed of the firm with effect from 18th September, yes, I could have changed the date, but as it is, I have put, yes, one of the partners of the erstwhile firm took over the entire business of the firm in his individual capacity, including assets, liabilities, and the other partners' dues were paid by him. He then continued the business as a sole proprietor with effect from that date. The assessee, relying upon section 78, subsection 2, claimed set off of the losses suffered by the erstwhile firm against the income earned as an individual proprietor, considering the case as inheritance, amalgamation, demerger, succession, which you all saw. Everything is in 78 too. Now it is like conversion of a firm into a sole proprietor. So he relied upon. The claim of the assessee was disallowed by the AO, which is right. Okay. Yeah, got your point. He got it right. Whether it is succession. whether it is succession. What are all the types of succession we have seen? Is amalgamation a succession? Yes. 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 Is demerger a succession? Conversion of firm into a company. Conversion of company into LLP. Conversion of sole proprietor into a company. Have we ever seen firm into a sole proprietor as a succession? The answer is no. The answer is no. This is not succession. This is not succession, my dear friends. Conversion of firm into is nowhere mentioned. Second, as Sriram was telling here, in the case of firm, there is a specific provision. Loss of a firm on reconstitution due to death or retirement cannot be carried forward to the extent of the losses. Loss of a firm on dissolution, this is amounting to dissolution of the firm, is completely lost. Is completely lost. This is not a specified succession. Even though other condition, all assets are taken over, all liabilities are taken over, I paid the partners. These are not the criteria. This is not at all mentioned anywhere in the law. Dissolution amounts to going out of existence. Number, when we do set off, I will talk detailed about it. Set off has one sentence which is the most important sentence, and then they speak about exception. I'll tell you that sentence now. Please understand. Losses can be carried forward and set off by the same assessee who has incurred that loss. Losses can be carried forward and set off by the same assessee who has incurred such loss. However, amalgamation, demerger, conversions, provided all conditions under 47 are satisfied, you can. Inga condition na avnu solla. Reverse is not possible. Leave alone this. Company into LLP தான் possible. Company into firm. It's like dissolution of a company or liquidation of a company and starting a new firm. You cannot take over anything. So coming back, this is not a recognized method of succession. Dissolution of a firm, the loss of the firm can be only carried forward by the firm. Okay? So please understand at this level, this answer. When we come to individual, assessment of individuals, in the question, where just giving you a glimpse. Mr. X, an individual, had losses. He dies. His wife, spouse, continues the proprietary firm. Can the losses be taken over? Yes. Section 78 we will read. Inheritance. This is only inheritance. But that is not possible when Mr. X is alive. Okay? From new proprietorship firm. Okay? So please understand, I told you in one part we will study about individuals, the death of an individual during the course of the year, after the year is over, like that. Okay, that will. So now coming to this firm question, this is not a recognized succession at all. This is not a recognized succession. There were no rules were read. Okay, so he cannot carry forward. Okay. When we do assessment set of chapter, I will tell you the case law. It is something like Pradeep, some case law was there, old case law was there. I will come to that when we do that. Okay. Laws can be carried forward and set off by the same assessee. Laws can be carried forward and set off by the same assessee. How? However, exceptions are mentioned in section 78 subsection 2, which are in the nature of amalgamation, demerger, succession, etc. Succession of proprietary entity from a firm is not a recognized inheritance. No rules are specified in the provisions of law. Further, on dissolution of a firm, the losses are completely this is not a succession, it's a dissolution of the firm. Question number 17 is very similar to question number 15. Okay. ABC Private Limited was converted into an LLP from 1st July. You are provided the following particulars as on that date. Unabsorbed depreciation, business loss relating to 15/16, unadjusted MAT credit, WDV of plant and machinery, the market value, plant and machinery 50 lakhs cost, deduction claimed under 35 AD, and building 20 lakhs, market value 30 lakhs, cost of land acquired in 2012 50 lakhs, market value 100 lakhs. Expenditure on VRS incurred by the company during the year 1920 is 25 lakhs. Company had been allowed rupees 5 lakh each year for the year 1920 and 2021. Explain the tax treatment of each of the above stated items, assuming the conversion satisfied all the conditions of section 47. Let's start the question. Okay. There is something practical also in this question. Okay. Question number 17. First, unabsorbed depreciation. This can be carried forward by the LLP and adjusted against any income. Business loss of financial year 15-16, 16-17, 17-18, 18-19, 19-20, 2021. 5 years is already over. 5 years is already over. This can be carried forward and set off over the balance 3 years. Here they have given the year. That was a pure theoretical. This is also a practical question. Okay. Business loss of 15-16, 10 lakhs. This can be carried forward by the LLP and set off against business income within the next 3 years. Balance period. Okay. 5 years is already over. So this has to be set off over the balance period, remaining period. Unadjusted MAT credit. Okay, this cannot be carried forward by LLP. Depreciable asset. Okay, according to section 43, this can only be recorded at value prevailing in the books of transferor entity. Section 47 further specifies that assets and liabilities should be taken over at book values. So 43 and 47 says this. plant and machinery, at what value can I record? 10 lakhs, not at, okay, only at and the rate of depreciation is 15%. 1,50,000. 1,50,000. Plant and machinery claimed as deduction under section 35 AD. Now at what value can you record? Nil. Okay. Nil. Okay. Building, at what cost you can record? 20 lakhs. Are you clear? Are you clear? Do you remember my popular statement when you are doing inter? There is a difference between horses and humans. Okay? நீ அடுத்த ஐட்டம்க்கு போயிட்டல, நான் தான் பொறுமையா ஒர்க் பண்ணியிருக்கேன்ல, கொஞ்சம் அமைதியா இரு. There is a reason. Okay? There is a reason why I am saying that's a practical question. It was converted on 1721 concept of proportionate depreciation. நானும் ஆசைப்பட்டேன், அதாவது போட்டு வச்சிருப்பாங்க ஆன்சரை பிரேக்ல அப்படின்னு. அவனும் பேனாவை மூடி வச்சுட்டு nothing wrong there, Raja. Concept of proportionate depreciation. So let us understand that once more. Concept of proportionate depreciation. What is that? Where depreciation has to be claimed by two entities for the same asset due to succession, then depreciation will be computed ignoring the event, and such computed depreciation will be distributed based on effective usage period. Now, by the company, the usage period is April 31 May 31, sorry, April 30, May 31, June 30. Okay, so 91 days. By the LLP, 365 minus 91. So, depreciation will be for the company 3,50,000 divided by 365 into 91. Whenever there is a succession, please store in your mind the depreciation, proportionate depreciation as a concept. Are you clear? Are you clear? Okay. So whenever there is, my dear friends, whenever there is a succession, keep in your mind if they give depreciable asset. That's why I said last question was a theoretical question. This is a practical question because they are giving a date and year. Last question, if you look at 15th question, they have not specified any year, date, etc. Here they are specifying, so it gets a practical shape. Now, non-depreciable asset, land to be recorded at original cost. So you can record it only at 50 lakhs. Expenditure on VRS compensation 35 DDA. Total expenditure incurred 25 lakhs to be claimed in 5 equal installments less okay claimed by company. How many installments? The company 5 lakhs each year for 2 years. 2 installments. Okay, 10 lakhs. Unamortized amount is 15 lakhs. Unamortized amount is 15 lakhs. This needs to be carried forward by the LLP and claimed in the balance 3 years. So every year 5 lakhs, 21, 22, 22, 23 and 23, 24 the LLP can claim. I know this question goes to penalty chapter. Okay, I'm taking up this question, but in penalty chapter, I will discuss this detailed with you. Kumar Brothers, the assessee is a partnership firm. During the year of the assessment, where the assessing officer noticed that huge amount of cash was accepted by the firm from its partners in the assessment year. The AO was of the view that interest was given to partners on amounts advanced, which was conclusively proved that the transaction are between different persons, whereby the firm has accepted loans in cash and the partners thereby initiated penalty proceedings under 271D. Okay, I'll keep it. This is a case law of Muthoot Financiers, where firm and the partners are one and the same. Normally 269 SS will say in excess of 20,000 the transaction should only be by approved amounts. Here it is a cash, it is a huge amount of cash. Is it a violation? The answer is no. In Muthoot Financiers case, it was held it is not a violation, because firm and the partners are one and the same. Between them, when you can recover whatever is the firm's liability directly from the partners, treating them jointly and severally. So between them, there will not be. So Muthoot Financiers is the case. I will discuss it in 269 SS and 271D. Yeah. Okay, but there is an alternative side to it. That's what I'm coming to. Again, I'm consolidating all the firms. Sometimes the case laws will come to you later, but the consolidation of firm related aspects. Assessee, Messrs. Carrier Network, a partnership firm comprising of 4 partners who have contributed capital in the books of the firm but failed to explain satisfactorily the source of receipt. AO has proposed to tax the amount credited in their account in the books of the firm as cash credit in the hands of the firm. Okay, I will explain this case law to you. There is something known as unexplained cash credit, section 69. We will study that. If you are not able to explain the source, suppose in a simple way to understand, today in your bank account there is a credit. You are unable to explain the source of that credit. Credit means it's an income to you. AO will tax it as income. Unexplained cash credit will be treated as income. Okay. The partnership firm had some cash credits. The AO asked for the explanation. The firm explained that it is contributed by the partners. AO asked, what is the source for the partners to contribute this? Unless they have earned it, they cannot contribute. For which the partners were unable to specify the source. AO proceeded against the firm. Saying that this is unexplained cash credit, taxable. Is the AO justified? The answer is no. AO can only proceed against the partners. AO should not have proceeded against the firm. The firm has explained the source. The firm has said, boss, source for me is this fellow. If he is unable to explain the source, AO should have M. Venkateswara Rao or case. Where, and there is one other case which we will see in assessment. Wherever there is an unexplained cash credit, you should proceed only against that person and not against. Okay. Question number 18 and 19 are case laws, which we will do later. As of now, in your notebook, write and keep. Question number 18. Okay. Firm and the question number 18. Firm and the partners are one and the same. Hence 269 SS not applicable. Hence 269 SS not applicable. Open bracket Muthoot Financiers. If you want more, refer penalty chapter. Refer penalty chapter. Question number 19. Okay. AO is not correct in proceeding against the firm. So it's a contradictory. Last question they said the firm and the partners are one and the same. Here it's a different stand. AO is not correct in proceeding against the firm and action can be taken only against the partner. Open bracket Venkateswara Rao. Okay, we will see these two case laws. I'm consolidating all firm provisions and questions in one place for you to understand, though we might read this in various places. Vishwasena is a partnership firm. The following particulars are made available to you in respect of its business for which books are maintained. Secret commission. Commission paid to partner's son without deducting tax at source. Loss in the above business after considering the above item debited to the P&L account. Business loss 80 lakhs. Unabsorbed depreciation 19 lakhs. In addition, the firm has a warehouse covered under 35 AD. Loss suffered therein 55 lakh. The firm has filed the return of assessment on 29/10. Specify the items with quantum which are eligible for carry forward. Will your answer be different if the firm files after due date? Read through. For the two questions, I will post the answer later. I will write the answer and post it. Question number 20. Is a partner, the following particulars are made available to you. Okay, right. Recomputation of loss for financial year 21-22. Recomputation of loss for financial year 21-22. Loss recorded is 80 lakhs, my dear friends. Is secret commission allowed as an expenditure? Disallowed. Secret commission takes the character of illegal payment. Yeah, bribe. Yeah, right, you're right. Hence, not allowed. Question இப்படி வேற கொடுத்திருக்காங்க. Secret commission paid to government official. 12 lakhs paid as commission to partner's son, being 0.5% of sales value without deducting tax at source. Two provisions. First, 40A2. They have not given the fair market value, so it is assumed that it is within fair market value. Then TDS default 30% disallowed. So 12 lakhs into 30%. Where return of income is filed within due date, that is 29th October 2022. Business loss carry forward for 8 AYs is 75 lakh 90,000. Unabsorbed depreciation carry forward for indefinite period is 19 lakhs. Loss of specified business carry forward for indefinite period 55 lakhs. Am I clear? Am I clear? Okay. The second part of the question asks, what will be ROI is filed on 29/12/2012. It's filed after due date, that is 29th December 22. Yes, Raja. Adada I am writing. Business loss cannot be carried forward. Business loss cannot be carried forward because you are filing it before after the due date. Whereas unabsorbed depreciation can be carried forward because it can be carried forward even if return is filed belated. Again, loss of specified business cannot be carried forward. This is a repetition of the 19th question. Only that it came in exam twice, so I have as it is. Okay, this is a repetition of the 19th question. Venkat and Co., a partnership firm, was constituted on 1/6 with 4 partners. All the partners contributed 10 lakhs. The AO verified the source of investment by the partner. Not satisfied with the explanation, AO assessed it as unexplained cash credit in the hands of the firm, which is wrong. They can only tax the partners and not the firm. Please write it as question number 22. Write it as same like 19. Repetition only. In exam, it got repeated, so I have asked it as. This is a very good tax planning question. Okay, a question which appeared in our co-professional group examination. So I thought I can pick it up. It's a very good question. Sanvita and Co. is a partnership firm trading in fertilizers consisting of 2 partners, S and V, who both have individual income from all other sources except remuneration and interest in excess of 10 lakhs, which means they are in 30% bracket already. Even if the remuneration is going to be 100 rupees, it is taxable at 30% because their other income is already in excess of 10 lakhs. For the year ended, the turnover of the assessee is 90 lakhs. The partnership deed provides for payment of remuneration to S, the working partner, at 6 lakh and 1.2 lakhs per annum to V, the non-working partner. S and V are amenable to drafting these terms differently as per your advice. Partners' capital are 10 lakhs each and the deed authorizes simple interest of 15%. Assuming that books of accounts are maintained, the profit before considering remuneration and interest is 12.5 lakhs. In the light of the above, state whether it will be advisable to opt for presumptive taxation and if the firm and the partners are desirous of reducing their overall tax liability, that is of the firm and partner, or should they go in for maintenance of books and audit? Will your answer be different if the assessee is an LLP? No, my answer will not be different. Read the question patiently. It's a tax planning question. Form the presumptive. Individuals ke normal tax. Let's try to do it and tell. Okay, not just client. So we need to work out two options, friends. If I go under presumptive, if I don't go under presumptive, how the overall tax liability, whichever is less, I'm going to go in for it. Plus partners, that's what they have said. Look at that. If the firm and partners are desirous of reducing their overall tax liability, okay, that is what is tax planning is all about. Computation of income and tax, not opting for 44AB, not opting for presumptive computation. They are not opting for presumptive computation. Please work out in the same manner. Together we'll work out. Okay. Particulars, firm, partner S, partner B. Income of the firm before remuneration and interest. Income of the firm before remuneration and interest, somewhere they have said. Okay, assuming that before remuneration interest it is 12,40,000. How much is interest on capital? Partners capital 10 lakh each. So 20 lakhs into 20 lakhs into 12%. 2,40,000. 2,40,000. You agree with me? 10 lakhs each. 12% is the rate of interest allowed as per law. So 1,20,000 per partner. Okay. Okay. So please understand. Please understand. This is an expenditure to the firm, income to the partners. This is an expenditure to the firm, income to the partners. Correct? Okay. Now I get book profit. Now I get book profit of 10 lakhs. Book profit of 10 lakhs. Remuneration to partner.
Sir, I have a doubt.
Yeah, go ahead.
Sir, the deed provides for 15% interest, no, sir. So in essence, the partners' remuneration will still be 1,50,000.
Yeah. I got your question. I'll answer that. Our friend's question is, the deed says 15%. That is, the deed says 15%. Technically, he says, this you will restrict it to 12%, I understand. But partners' taxation will be 1,50,000, 1,50,000. Though this is only 240, this is 150, 150. That is his question. The answer from my end is, the law says the allowable remuneration and interest is taxable in the hands of the partner. This is not doubly taxed. I tax 60,000 here also it is not so. Okay. Interest and remuneration which are allowed in the hands of the firm is taxable in the hands of the partner. So even though they are getting 1,50,000 as interest, what is taxable in their hands is only 1,20,000, because whatever is allowed as deduction in the hands of the firm can only be taxed in the hands of the partner. So, book profit 10 lakh, remuneration to partner S, working partner. He is the only working partner. As per deed, his remuneration is 6 lakhs. As per act, 7 lakhs into 60% plus 2,70,000. This comes to 6,90,000, whichever is less. So 6 lakhs can be claimed, which becomes an income for the partner. Yeah. But that 1,20,000 of partner V, you will not give it to partner V, because I have not allowed it at all. I have not allowed it at all. Huh? Oh, sorry. Suldaraja. No, 5 lakhs. Whatever is allowed as a deduction in the hands of the firm will only be treated as income in the hands of the partner. tax at the rate of 30% into 30% into 30% into 30%, because for the individual partners already the other incomes have exceeded rupees 10 lakhs. So whatever they get from the firm is taxable at 30%. I hope I'm clear. The second option, my dear friends, computation of income, okay, and tax, if they are opting for 44AD. If they are opting for 44AD, total turnover 90 lakhs. Total turnover 90 lakhs. Income at the rate of 8% under section 44AD. 7,20,000. All expenses including remuneration / interest are deemed to have been allowed. Huh? Nothing will be there. Nothing will be there for individuals. Okay. lakhs at the rate of 30%. So if you look at the firm alone, previously it was 124,800. Now it is 224,640. Now it is 224,640 if you look at the firm alone. But if you look at the overall tax, because there the partners are paying, here the partners are not paying. Okay. Option 2 should be preferred as the overall tax. Partner plus firm is lesser in the second option. You can prove. This is tax planning. We are not doing anything. And I think in your office, in all the cases, if it is a firm, we do this and see. Five years lock-in period. Once you opt for 44 AD, 5 years lock-in. Question number 23. Again, we will read this again in clubbing. Pallavi is a partner in a firm with 30% share. Her capital contribution representing her own funds on 1/4/2020 is 5 lakhs. She received a gift of 10 lakhs from her husband on 1/7/20 and invested that 7 lakhs as her capital in the firm. She withdrew the entire interest on capital and working partner salary and share of profit for the year ended 21. Her capital as on 1/4/21, 12 lakhs in the firm. She received 4 lakhs gift from her father-in-law on 1/5 and invested the same in the firm. For the year ended 31/3/22, her income from the firm are as under: interest on capital at the rate of 12% on 16 lakhs for 11 months and at the rate of 12 lakhs for, on 12 lakhs for 1 month. Share of profit. State how Pallavi's income from the firm would be taxed. I know this is more of clubbing, but read it. Since it's a firm, I'm consolidating everything. Read it. It's a base provision which we all know. Okay, okay, right. Please understand. Please understand the base provision which I am speaking. Any transfer of asset to spouse, asset includes cash, everything. Any transfer of asset to spouse, income from such transferred asset is taxable only in the hands of transferor. Any transfer of asset to daughter-in-law, income from such asset transfer should be taxable only in the hands of transferor. This is the base provision. 12 lakhs is her capital, 5 lakhs is her own funds, 7 lakhs is gifted by her husband. So interest for the 7 lakhs is not taxable in the hands of Pallavi. It is taxable in the hands of her spouse. 4 lakhs gifted by father-in-law. The interest on this 4 lakhs is taxable not in the hands of Pallavi, but father-in-law. I know it's a question of set of chapter, clubbing chapter, but still since it is a firm, I thought all firm things should be there in one Excel sheet. If you take that Excel sheet, you should be clear about firms. Okay. Transfer of asset to spouse without adequate consideration. Income from such asset is taxable in the hands of transferor. Similarly, transfer of asset to daughter-in-law. Okay, on her own contribution, the interest 5 lakhs into 12% for whole year. This is how it is taxed. It's a clubbing question still. That is what they say. 12 lakhs into 12% for 1 month plus 16 lakhs into 12% for 11 months. That is what the question has said. If you put the total, it will come to this amount. So state how Pallavi's income will be taxed. It will be taxed like this. In the hands of Pallavi, 176 plus 12, 18. That is the total. This is the answer. 1,88,000. Share of profit is exempt. I'll write that also. Share of profit is exempt under section 10 subsection 2. For the partner, yeah, for the individual, yeah. For a firm gives share of profit after paying tax. Question number 24. Who shall sign the return of LLP? Managing partner or any partner who is authorized or designated partner. In LLP, there is a concept called designated partner. Designated means who has been appointed. Since sometimes some partners will be outside India, they need to appoint a person to represent them in India. That is known as a designated partner. Okay. Question came in the year in which LLP was introduced into the law. Because you will wonder why such a small question. நான் எந்த லெவல்ல படிக்கிறேன் என்ன போய் இறக்குறாங்கன்னு மன்னிச்சிடுங்க அவங்க அப்படி பண்றாங்க நாம என்ன பண்றது. An LLP is dissolved. Analyze the liability of the partners with regard to his tax due, which we all know. All the partners at the time of dissolution or jointly at 1 minute, severally liable. One mistake. Okay, all the partners in the year of. வேணும்னே ஏதாவது ஒரு partner, he cannot retire on January 1st and the firm is dissolved on March 31st. He will also be liable in the year of dissolution or jointly and severally liable for tax dues. AO shall raise the entire demand even against one partner. The limited liability is not even for a company. I'll prove you when I come to company. Limited liability is a shield which we are putting in front of us. Just as you said, it is only for creditors, not for governmental dues. AMC LLP has a profit of 500 lakhs after charging interest on capital of 10 lakhs for Mr. A partner 15%, but before charging remuneration. The entity wants to know what can be the maximum amount distributed as remuneration, that assuming all partners are working partner and the constitution deed of LLP permits such remuneration. சமயத்துல எக்ஸாம்ல இந்த கொஸ்டின்லாம் படிச்சுட்டு இது ரொம்ப சிம்பிளா இருக்கு, இதுல ஏதோ ஒரு விஷயம் இருக்கு. is 500 lakhs and excess interest on capital charged. How much is the interest? After charging interest on capital of 10 lakhs for at the rate of 15%. So 10 lakhs divided by 15 into 3. Two lakhs. Book profit maximum permissible remuneration so just that I'll do the working alone. Power went off, so I'll do the working alone. Maximum permissible remuneration. Okay, because the question says that as per deed also it is the same. Deed permits whatever as per act. So 3 lakhs into 90% plus 4 crore 99 lakhs into 60%. So repeating, this minus 3 lakhs into 60% plus 2,70,000. So 3 crore 2,10,000. This is the maximum permissible. That's what the question has asked. Not the income, but the question itself has asked us to find out the maximum permissible remuneration. 3 crore 2 lakh. Okay, assuming that. We meet tomorrow to continue with A.